Hello and welcome to the weekly commodity market update on Brownfield's Will Robinson, joined as always with the University of Missouri's Ben Brown. How's it going, Ben?
Yeah, I'm doing all right. Will, how was your weekend?
It was a good weekend. Went to the Ohio State game. A little bit of sloppy football, but still a win for OSU. How was your weekend?
Yeah, it was pretty good. I love college football, and so it's exciting to have games back on TV, and there's some pretty good matchups.
Yeah,
So,
yeah.
pretty good weekend for football.
Oh yeah, for sure.
You know,
Uh,
I'm not take too much time here, but this coming weekend is a big weekend in my life. So my two alma maters are playing each other in football. K-State comes to Mizzou, and pretty excited. I've had this one circled on my calendar for literally years. This is my Christmas.
well, hopefully, you're rooting for the right side. Especially with it being at Furrow Field. But we'll see, Ben. I won't
Be a
pick.
good time. It'll be a good time.
All right. Well, looking into market adjustments that we've seen over the last week, starting off with the December corn contract, it's up 5 cents at 4.85. November soybeans up 6 cents at 13.69. Soybean oil for October is down 2.63 cents at 61.34. That's on cents per pound. Soybean meal per short ton for October is up $5.80 at 4.06. And then looking at the wheat crop, December 23 wheat is down 14 cents at 5.84. July 24 wheat down 12 cents at 6.37. And then that crude oil adjustment up $2.13 at 85.87 on the September contract. So Ben, what are your initial thoughts on the adjustments that we've seen? Some losses in wheat, some positive movement within corn and soybeans.
Sure. So at our weekly staff meeting this morning, my colleague Bob Maltzberger, who teaches one of the grain merchandising courses here at Mizzou, was talking about how here in the next couple of weeks he's going to start having a contest with his class to where on Monday they will try to predict and come up with an estimate for what the Friday close of corn will be. And whoever gets closest will get a bonus point or something like that. And I kind of just looked at him and I told him, I was like, well, for the last month or so, you could get you could come pretty close on the Friday close by just taking the Monday open. And I think that's what, you just read to us, over the last week, corn's only changed 5 cents. And that's been kind of where we've been for the last month and a half. And kind of rare, as we think about harvest pressure pushing down some prices. I think it's really, that uncertainty around, there's less corn out there than maybe what a lot of people anticipated, but we're also just not using a lot of corn, and that's just kind of keeping that price pretty range bound at the current time.
Well, talking there, hinting at the production that we might see and the harvest that we might see this fall. USDA has an upcoming report coming out looking at the production estimates. So Ben, as we dive into this report coming up, what are your early expectations? How do you think this report stacks up, and what might we see?
So I do anticipate that USDA is going to revise corn and soybean acreage, planted acreage higher. They'll incorporate the Farm Service Agency acreage data through August. That has certainly suggested so far that there was a little bit more acreage of corn and soybeans out there. As a result, that'll also increase those harvested acres numbers for the time being. As we get to the end of the year, they have a chance to revise that. But I do think a little higher harvested acres being more than offset by lower yields. On the corn side, that could be as much as a bushel and a half potentially. So taking that down to 173 and a half bushels or 173 flat for the national average. That's still not as low as where we were last year. So the potential's there to beat last year's yield record or yield forecast. However, on the soybean side, if we take that down another half bushel to the acre, so coming pretty close to $50 bushels per acre, that's really starting to tighten that soybean complex. And the big question I have there, and maybe we'll talk about demand, is how big of a revision does USDA have or can they make on the demand side, the soybean demand side, to absorb that production loss?
So Ben, you talked about the planted acreage. Maybe even if that increases, that probably won't make up for the drop that you're expecting for overall yield and production. So basically saying there that the carry out's going to drop. So what's the demand picture look like, as you kind of just hinted there, as we see maybe a tighter carry out moving forward?
Sure. So on the corn side, let's just start there. I'm anticipating that both of those revisions, higher acres and lower yield, takes about 100 to 150 million bushels out of our corn production column. So 150 million bushels gone there. However, when I think about the carry out for the current year, I'm only anticipating that the carry out increases by about 25 to 50 million bushels. So that's, 100 to 125 million bushels that I think are going to come out of the demand side. I think largely that's going to come out of the export bookings front, but also, maybe 50 million bushels out of that feed and residual use category. As a reminder to our listeners that, that feed and residual category is what's left over at the end of the year that can't be accounted for. We assume it's mostly feed, but in some ways that's production. So if the size of the crop gets smaller, that residual gets smaller. And so, if we take 150 million bushels out of the production picture, it's not out of the line to think that 25 to 50 million bushels will come out of that feed and residual category, maybe 50 million bushels out of the export front. So there's 100, or, there's, 100 million bushels right there. You got to come up with 50 million elsewhere. And I certainly think that's possible. So so that's corn. Do you have any comments about that, Will, what I said?
Not immediately, no.
Yeah, not immediately. I'm doing some crazy math over here. This is Missouri math. So hopefully
Brown out here just throwing around hundreds of bushels, just,
hundreds of bushels.
Just
I'm like Oprah. You get 100 million bushels. You get 100 million bushels. On the soybean side, right? Okay, so I'm thinking that we're going to take maybe 25 to 40 million bushels out of the production, excuse me, 50 million bushels out of the production category. So we're going to take 50 million out of the production category. And I think we've got 25 to 40 million bushels that we'll take out of the demand picture. And so, that still tightens ending stocks to some extent, but again, it's kind of that same type of thing we were talking about on the corn side, to where production comes down, demand has to be pulled down a little bit to match that supply. The difference here between the two crops is on the corn side, the demand picture is certainly already suggesting that that's happening. On the soybean side, I think we pull down demand due to higher prices, or, hot prices being high enough that it rations demand as we get later into the calendar year on the soybean side. So a little bit different in terms of how those demand revisions actually come to fruition.
And just for a little bit of reference for listeners, whenever you talked about, 50 million bushels of change, maybe for soybeans, that's in a context of a market that's, easily over 4 billion total bushels, correct?
Sure. Yeah. So I think we're going to have a 4.1 billion bushel, production year on the soybean side. That's
down.
That's my estimate. I think that's maybe even a little bit optimistic given what I've seen the last couple of weeks. The soybean crop certainly got hit pretty hard with that late season heat and just dryness. The plants are just dying in some cases, and the pods are very small. So I am concerned about soybean production.
Well, even without being an optimistic estimate, even if that came into fruition, that'd still be back-to-back years of down production on the soybean front out of the United States. So something kind of interesting there on maybe more of a macro trend. But Ben, looking forward into the rest of the week, what should farmers and ranchers really be paying attention to? Because the report we're talking about, these reports from USDA, they're probably going to come out before a lot of the viewers get to see this. So what else should they be watching for?
Sure. So then Friday, we've got the National Oilseed Processors Report that comes out on Friday at 11 a.m. We've got a variety of other reports. The ones that I'm probably most interested to see, because I'm a nerd, it really applies to the macroeconomic front. So we've got a series of reports related to inflation and jobs that are set to come out this week. That will really be the last set of reports before the Federal Reserve meets at the end of the month. And so I'm very interested to see if this kind of continues to ignite a fire under the Federal Reserve, that more action needs to be taken as we think about the end of the month.
All right, Ben. Well, I appreciate the insight you provide. It's always appreciated and valuable to everyone who gets to hear it. Viewers, listeners, if you'd like to learn more about us, what we do, or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.